When Luckin Coffee opened in New York in late June, it became the latest Chinese brand to set up shop in the Big Apple, and customers we spoke to seemed impressed.
I think it's great. I think that I've no complaints so far. I didn't actually get their normal recommended lattes or whatever because I don't drink caffeine, but this is pretty good.
Luckin is the latest in a list of Chinese companies trying their luck in the United States, but other brands have been around longer, like the beverage brand Heytea, which opened its first US store in late 2023, and Pop Mart, which sells the popular Labubu toys, opened a few months earlier. Both companies have shown strong signs of success in the American market, with Haiti now having 30 stores in the US, and it's reportedly the fastest growing tea brand in the country. Meanwhile, Pop Mart is seeing astronomical growth, in part due to the popularity of Labubus. The company says its US revenue surged more than 500% between 2023 and 2024, while sales in the first quarter of this year climbed 900% compared to the same period last year. Professor Arthur Dong from Georgetown University in Washington says there are many reasons these companies are choosing to launch in America.
First of all, the slowing of the domestic Chinese economy. The hyper amount of competition within its domestic economy is motivating many of its leading firms, especially those that are consumer-based, to seek opportunities abroad. The United States happens to be a very large market, as well as a market that's open to new concepts and new ideas.
Dr. Larry Shagoris from New York's Pace University adds that many of these brands target younger customers who may be open to new names and are attracted by low costs and price incentives, something Luckin Coffee is known for.
I think the younger generation or younger consumers are more willing to try anything once or even twice. They also have more limited resources. They don't have the deep pockets that their parents and their grandparents have. So sometimes they're forced to try these lower cost, lower priced items. So I think they're the best way to work yourself into a marketplace through selling to younger consumers. And younger consumers tend to often establish trends. So it's a perfect marriage.
It's not just businesses selling low-cost items. It's reported a record number of Chinese companies are seeking a US stock market listing this year, with 36 of them going public in the US in the first half of the year. But the US tariff war could pose a threat to some of these companies looking to make waves in the United States.
For any company that's engaged in the sale of goods and merchandise, physical goods I mean, like Labubus, I think they will confront tariff challenges depending on where these Labubus emanate from. Whether they emanate from China or Vietnam or Singapore, all of them are going to be subject to blanket tariffs. So that'll be a challenge. But for service-based companies such as Heytea as well as Luckin Coffee, they're not going to be subject to tariffs unless, of course, they import products from China or from their home country of origin.
For now, the US has extended its trade truce with China through to November, during which time both sides will hope to have reached a long-term agreement. It's something many of these companies will be counting on too, as they look to make the most of deep American pockets. Mitch McCann, CNA, New York.